Hey everyone, happy Valentine's Day. Wanted to trying a couple different things today for Valentine's. Wanted to get three stocks in one sitting. So we're gonna go over some Valentine's related stocks. So we're gonna start off with Hershey, move on to Tiffany, and then finish off with 1-800-Flowers. Seems like a good trifecta of Valentine's and love and whatnot. Uh, and hopefully get some value out of this. And three for good luck. So let's start off with some of the fundamentals, and I don't want to go too crazy with this, but and again, I'm gonna try something different. So I'm gonna actually show because I was doing full screen on the TradingView app, but that was giving me issues with the switching screens and whatnot. So I'm gonna try to do this approach, and then we'll see. If it sucks, let me know. So we're gonna hop on over to FinViz to look at the Hershey fundamentals. And again, I don't like to go too crazy into fundamentals. I just like to get a pretty, just a bird's eye view of fundamentals. So as you can see here, and my head is somewhat in the way, but I think you can read it. Really, the fastest way to see this is if you have no idea what any of this stuff is, this video is gonna be just a quick look. So the best way for you to see this, if you see a bunch of red, not good, just not good. So the PE ratio being at 29 is so. Black being kind of neutral, green being good. So earnings per share growth this year is at near 58%, really good, obviously in green. This is the price to book, 19. So, considering the stock price is 160, not the best. So it's in red. This is price to earnings growth. And you can kind of get a bird's eye view of fundamentals on FinViz. And it's a great site. It really is a great site. It even gives you some price action. There's price patterns built into the chart. This is what I've been reviewing the last couple of days, which I really don't put much. I don't put much weight in, analyst upgrades or downgrades and stuff like that. I rather do my own research. But I was a little bit called out on one of my previous. I think it was on the Facebook video that I only saw or paid attention to the first one. Really, I don't pay attention to anyone, but figured I'd bring it up this way, and I think this way it's going to be a little more clear. So I'm glad that person actually brought it up, because it's good. It's good to have it there. So we can see here that this year so far, Jefferies has put a hold on Hershey's. There was a downgrade from Merrill in December 20th, and the rest are kind of, it's hard to say neutral, but they haven't really moved. So holds, buy from Merrill. So this Merrill, yeah, so this was downgraded. So we can't take that into account. UBS was upgraded, but this is back in July, so almost a year ago now, from sell to neutral. So you can see here, I mean, it's pretty much all over the place, but we have to go, this is going all the way back to 2018, so I don't know how much weight you put into this. I rather see the last year, and preferably the last 3 months. And again, I don't really, I just, the way I don't even interpret this. What I do is I come up with my own analysis, and if that analysis happens to line up with some of the, let's say that, for example, it comes out to 155, whatever technical analysis I come up with, and I believe it's going that way. If I believe it's going bearish or bullish or whatever it might be, and my price target is near the 155, I just consider another reason, another confluence. That's it. I don't put that much attention into the analyst targets. Maybe I can make a video on why, but that'll be on a separate, I guess that'll be on its own thing. So if you guys want to see that, let me know, comment. So yeah, so let's move on. Let's not make this a 2-hour video. Obviously today is Valentine's Day, so you're gonna have a lot of Valentine's Day news. So there's a ton of news with this one. And insider trading for me that's a huge one. So, well, it is. It's a big warning. So if I see a bunch of sale, a few buys, but these buys are pretty low. I mean, don't get me wrong, it's still $259,000, but when you have that and then the president and CEO is selling 6,000 shares for 774,000. Good Lord, I can't talk today. Yeah, it just offsets. So you see basically the red here, all sales. It just doesn't give a lot of vote of confidence. And I understand that some people, some insiders trade to profit off of it. That's normal, I understand. But if it's neutral or bullish, I want to see, if it's bullish, I want to see a lot of people buying. I just want to see a lot of people buying, because that gives me a vote of confidence in the stock, because the insiders, the people that know about the stock, they're bullish on it. They think that the price is undervalued. They're going to buy expecting the value of the stock to go up. So if we see a lot of people selling, it doesn't make, to me, it just doesn't calculate, does not compute. Why would, if you have so much faith in the stock, why sell? Why sell if it's valued or undervalued or fairly valued? You should want to hold, and I understand selling a little bit, but yeah, you wouldn't want to see sell-offs since June. Yeah, so that's basically the way I see it. So I see the insider trading here, and the way that I interpret it is not so good. So that just gives me a little bit of a pause in that sense. So going up to the fundamentals, it's just not crazy. I mean, the earnings per share this year, the growth has been great. Next year, the expected growth is 5.61%. We have to see, it has a price target here of 151. So we'll see how that, if we can kind of come up with the same number. But it's not a stock that I would really want to get into. At least not fundamentally. Nothing really shines. Now let's look at the charts. And I always look at the log down here on the bottom right. Oh, I just noticed that. Okay, I think that might have worked. Down here on the bottom right, we have the log charts. So let's try to do some pretty quick technical analysis on this. So this is, wow, this is from 1974. We've been on a very good uptrend. So we can see lining up, give or take. Actually, let me draw the ray to this swing low of 74. Wow, crazy. To this swing low of 2009. Man, that has, I mean, I'm impressed with this price action. I mean, it's nice. That's exactly what you want. Can you imagine having bought down here at 35 cents and then just seeing this grow over time? I mean, it's beautiful. If we switch to a non-log chart, you can see that a little bit different, but still, I mean, it's powerful. Let's go back to the log chart, and on a monthly, let's zoom in a little bit. We have, let me draw another trend line here from this low to this low here. We are on a very nice uptrend, and this is, I mean, decades of uptrend. So hard to go wrong technically on this. On the long term, it looks like it might start getting a little double toppy up here on the monthly, so that's a little bit of a concern. Yeah, I wonder what that's. I guess we'll dive in deeper on the weekly. So it's looking a little bit extended, so maybe there might be a pullback. That kind of makes some sense here. You see that we had a little bit of a pullback. Actually, no. This is why I like to tell you guys that just because a stock gets into overbought regions in the RSI or the stochastic, it doesn't mean that it has to, dump. Not at all. On the contrary, here's a good example. I think yesterday I was trying to look for an example and I couldn't. So this was actually pins on the monthly since March 2011 until April 2014. So 3 years and change. Pins to the overbought, and yet we had an uptrend in price. So that just, I hope that kind of makes it kind of clear. Usually what I like to see, sorry, I got a notification up here. What I like to see is that if it is gonna, there's like a slight change of a trend or something that it breaks. Let me actually make this a little bit bigger. Ooh, where were we? So let me zoom in. So pin from March 2011 all the way through March 2014. So 3 years. And you have a lot of just, crossing over the I call it the EMA. It's the KND. Finally broke through, and then it broke below this the 80 mark that I have here on the stochastic. So once it gets there, that's where I start paying more attention to it, because that's usually it starts testing at least the 50% level of the stochastic, and then if it breaks that, then you have a small pullback. But that, I believe, if we look at the price, it wasn't like a crazy dump. We were looking here, so we go from 108 in price to, at the very peak, we go down to $88, $87, give or take. Nothing crazy. So yeah, so for me, this is more of a just, and this is actually, I've seen it better in lower time frames. The RSI did give you a little bit of a warning here with a little bit of a divergence here. Let me see. Here you got a little bit of a divergence. Let me draw it out for you. Here and continue down there. So that July 2013 to February 2014, that kind of gave you a little bit of a heads up, and that indeed caused this retracement. Well, it didn't cause it, but it just lined up, let's say it that way. Then we had more divergence going from here to here. It's just a nice long divergence there. And once again, we had a pullback there. So that's why I think RSI divergence, and you can also see it on the stochastic. You can do the same divergence, which is probably the strongest or the best way to interpret these indicators is divergence on either one or in both. If they're, both are usually synced up in that sense, but you can see that it's pretty clear that we had lower highs in RSI and stochastic, yet we had a higher high in the price. So that's enough of the monthly. Let's dive into the weekly. So we have this swing low. We have this possible double top forming. We had a little bit of a double top there, like an M, broke through that M here. And usually that's pretty bearish, but we were able to break above and create a new high, but now that's creating, I don't know if you want to call this a triple top, I don't know if you want to call it a double top, whatever you want to call it, it's testing this high. So we have to see what happens there. Ideally, I'd want to see it break above that right there, so above the 162. But it's on an uptrend. Now, do we have divergence? Here to here? No, we don't. Here to here? No, we don't. And we have higher, so I don't see any divergence there. On the stochastic, pretty much the same thing that I'm seeing. So I don't really see divergence. I just think everything is in confluence so far. So this is that very long trend line, and you can see how, I mean, it's insane. It's from 74. I mean, that's crazy. So what can we see? Do I think it's going to go up or down? It doesn't matter what I think. What matters is what the charts might indicate. So we have a possible retracement down to the, well, first off, it's kind of respecting and broke through the 20 EMA. So I have the yellow is the 20 EMA, the red is the 50 EMA, and the purple is the 200 EMA. and over time, let's see how well it gets respected. So 200 gets tagged, tag, breakthrough, support, I'm sorry, resistance, support when above, resistance when below. So finally broke through. The more tests of a trend line or an EMA, the more likely it is to break through. So the 20 is a very good indicator of where we are. So being above it, we're bullish. Will we see a pullback to the 61.8? That would mean that on a weekly, it would have to dump right now down to 117 to the 61.8. Very unlikely. Anything can happen, but I just don't see that being I don't see that being done anytime soon. A more likely scenario is a pullback to the 38.2 if it is going to pull back and then bounce off of this long-term trend line. So I can see that happening. Maybe, I don't know if I can draw a little, my drawing skills on this suck, so bear with me. So maybe roll back down, test, and then market structure and then break above that. So I could see that happening. Historically, it seems that respects it. It might. So that's if it respects the long-term trend line. Maybe it breaks below that and respects this this shorter time, which is not that short. I mean, this is a decade, over a decade of data. So that swing low to this swing low here. So maybe we see a bounce here, test, break below, bounce here, and then do its thing. Could be. I don't have a crystal ball, so I have no idea if that's going to happen, but it's possible. So once again, when it comes to bearish ideas, if I think there's going to be a pullback, likely between the 382 and the 61.8 on the weekly, I can see that happening. And that goes below the these. Again, I really could care less what these guys say, but just for giggles, I'll take a look at it. So this was a bearish, a downgrade to 55, hold and hold. So 55, 55, 58. So we're in that region, between 152 and 165. So that little region there. So let's see how they got there. Well, one of them's already there. 155. So let me draw an ABCD. Get a little bit closer so you guys can see it. I don't know if you watch this on a iPad, on a phone, or on TV. So try to pay attention to see if I can make it a little bit bigger for you guys. So let's go from this high here and go to this low and then clone it. Sorry about the mic issues. I'm trying for my mic not to rub against my shirt. Gotta invest in better quality. So this broke above that, but let's assume we say that that's like the max peak of this. I mean, we're looking down to a 138 range. I don't know if I can hold that much value to it. Usually when it breaks that high above, this ABCD, in my point of view, is kind of broken. What I would have done a couple weeks back, had this action not happened, I would have put it at this high and would have said, hey, maybe we're looking at a 50% retracement and it's going to touch this trend line. But I don't see it. Now let's dive into the daily. Maybe we see it a little bit clearer there. So yeah, I'm wondering where they what date did this person? Oh, October. Yeah, this is, well, December. It's not that far. So let's look for December-ish, 20, give or take. Now I wonder if they drew some sort of a trend line here. And would this make sense? They went there. Yeah, not really. Did they go here? Oh, there's no way. Yeah, kind of curious. Maybe what it did was this one up here. Sorry for the dead noise here. But Just trying to figure out how they came up with that 155 region. Yeah, I don't see it. Maybe it's a horizontal that they're picking out. I know it was going to take too long, but I'm already 20 minutes in to this 3 stock edition. So we have this horizontal there on the daily. We have another horizontal here on the daily. And we have this one here is a pretty solid horizontal. Probably 158. Yeah, I don't see where that exact 155 happens to line up. Again, it doesn't really have to give confidence. I think I'm just, when you try too hard, that's kind of what happens. You kind of overextend yourself. So, and you kind of want to make things happen that shouldn't be happening. You got to keep it simple. So I'm going to just disregard any of these analysts things and just see what's going on. So let's try to see, are you bullish? If you're bullish on Hershey, where do we likely see upsides? If we break above this little double top that we had here, I can see obviously first stop being that 1.13 extension at 171. And if we're really bullish, to try that 182, and ultra bullish market, everything goes according to plan, 207. But more realistically, we would be looking at price action between 171 and 182. That would be my bullish price target for this. And if I was bearish, pretty much what I said last time, which is a tag of that between the 38.2 and the 61.8. Can't think. Which is between 134. So let's say 135 and 117 or 115. That would be my analysis. But if we do tag this, again, there's a solid trend line here, and then a more minor trend line down here. But we can see some tags of this, and even if it breaks down here, it breaks below this trend line, you're still between the 61.8 and 78.6, which is a very normal bounce area, like a retracement, a buyback zone. You come into this section, consolidate for a little bit, and then continue on your way up. And there's no reason to think otherwise. I mean, Hershey's has just been, again, let me go back to a monthly chart so you can see how crazy this uptrend is. From 1974, we have this insane rally. It's good. It's hard for me to be bearish on this. I didn't draw any horizontals on the monthly, but this would be my first horizontal. So on an ultra, yeah, so that 117, that 161, oh my God, I keep saying 161. The 61.8 retracement being close to that 115 level does line up with that horizontal. So don't be surprised if we see this kind of action happen. Test, break, touch, and maybe even break down below, and then do its thing and go up, keep continuing on its uptrend. That would not be crazy. Even this 78.6, it wouldn't be crazy. At least not in my point of view. It's not anything too bad. And again, 70.6 lines up with a pretty decent little horizontal level, as it should. So yeah, that's basically Hershey's. I'm seeing that it's strong. The RSI on the daily, I don't think I took a look. So it's strong. So we are above the 50. We're in that bullish zone, which is above the 60, 65 region on the RSI. And same thing with the stochastic. We're getting close to, well, we still got a couple of days for it to potentially flip on the overbought region. But we've been bullish. We've been above the 50 for a while. It even tested, broke just below it to go 45 and then bounced right back up. So really, I'm not bearish at all on Hershey. We have to see what reaction we get here at the 160 price, 162 price level. Does it break above that, and does it keep rallying to new highs, or will it come back and test and then try to break that price. So that is Hershey. So let's already set up Tiffany. And let's close out Hershey already because we're done with Hershey's. So Tiffany. I want to have Hershey in my head. So with Hershey, just realize I'm off the screen here. So again, just a quick bird's eye view. You see some red mixing with some, some annual earnings per share growth in the past 5 years has been bullish, 26%. But some of the stuff that I pay more attention to, like the price to earnings ratio, the price to book, the book price, the book value per share, neutral to a little bit on the bearish side. Again, this is a super simplified version of all this. There's a ton of shares. I like for this to be lower. Again, it's not insane amount of shares, but I like for it to be below 40, preferably below 30 shares. That way, it's just better, it's less diluted, for lack of a better term. It's had quite a few of downgrades starting in October. Had one day apart, we had Deutsche Bank going from hold to buy from 100 to 130, and then a day later, Bernstein. Correct me if I'm wrong. Downgraded from outperform to market perform, but no target. Oppenheimer downgraded from outperform to perform to 126. That's a funny one, huh? Outperform to perform. It's like it's still performing, but anyways, not as bullish. Buy hold to 110. So a little bit of a mix here. Judge for yourself, see however you want to interpret that. But it looks like there's a midpoint somewhere. And just quickly reviewing this, I would say maybe the 120 range might be it. So we have 110, 126, 130, 140, 100. I would say 120 seems like a decent little target there. 115, 120. So more news. You can dive into this to your heart's content. I mean, if I really want to dive into it, I could, but I just not so into it. So if you're not sure what Tiffany is or does, there's always a summary right here on FinViz. Tiffany is your, it's a upscale jewelry. Everybody that wants to get married and they want a diamond. And if you have some money, then you go to Tiffany. But they also sell some other stuff. I think they used to sell lamp fixtures, like light fixtures back in the day. So don't know if they still do. It says here, the company sells its products to retail, internet, and blah, blah, blah. Got another notification. Remind me in an hour. So it sells jewelry collections, engagement rings, and wedding bands. It also sells watches and home accessories. Eyewear. I have no idea. And fragrances and wholesale diamonds and earrings. So yeah, I'd be surprised if you don't know what Tiffany is. But hey, so recently, it hasn't had that much insider sales. I mean, move activity, I would say. But there has been some pretty from June to December of last year. Quite a few sales, but this one was pretty big, huh? So this was the director, and then this is the CEO. So CEO dumped quite a few shares, adding up to a total of $36 million. Was that? Yeah, it was. So not terribly bullish. I would say it's a warning from my perspective. So yeah, fundamentally, I don't see anything too hot here. So let's see if the charts tell me something different. So let's go. We're on a monthly again, and again we see that we are on a very nice uptrend. So we can try this. Come on, cooperate. So this one here is not really cooperating as well as I'd like. So I'm gonna try to modify it a little bit. So this particular trend line seems to be obeyed a little bit better. So we have several touch support, and has never broken it. Maybe briefly down here in 95, which is crazy. And ever since has been a pretty steady climb. Let me see if I can. Sorry if I stay quiet. I'm analyzing as I go along with you. So on a monthly, let's look for some horizontals. So I think the clearest one is probably here. Why does it do that? So we have one and another little, it's a decent little one. Why does it do that? Anyways, so we have one there, and then and then here's a decent little one. So we have resistance, resistance, break, resistance, resistance, break above, resistance on the above horizontal, and then playing that range, breaks below is horizontal. So we have a decent little range there on the monthly. So looking at the RSI, it's been pretty neutral for a very long time, like a very, very long time. So bullish to, it's been really like just very, very even. So this is a 50 level, which means, you know, between the 60 and the 40, you're looking at you know, pretty much like a neutral zone there. So not really terribly bullish, not really terribly bearish. So it's been pretty much there a couple times, or most of the time, and then with some brief breaks, such as this in 2007. We had some lower touches here in 2009, as expected. Another touch here, high of 2011. So really kind of it's hard to say that it's here or there. It's just really neutral, I would say. So I would just keep an eye on this trend line on the monthly, and this is super macro, and see if it just kind of respects that and what's going to happen. But yeah, these horizontals to me seem like the most obedience, I would say. We have another look, just like Hershey previously. We have another possible test for a double top here. Now this is interesting because we have a nice little range here, and then we have like a break, and then structure, which it was bullish, break up, but like destroyed that horizontal, and now kind of got stuck on this possible horizontal here. So now what's going to happen there? Is it going to break above this and not create a double top, just break above that, or is it going to break back down, test this trend line, and continue on its way? So on the, yeah, let's go. So that's enough for the monthly. Let's go in on the weekly. So on the weekly, we have some funky price action here. That's interesting. We have some gaps there. People interpret gaps differently. To me, it is a gap, especially on the weekly. So we see that we're a little bit overextended on the stochastic, but we haven't rolled over yet, so we're pinned there. Not bearish, so in my point of view. And on the weekly, we're pretty freaking bullish on the RSI. So again, let's modify this one here, this trend line, and we can see that hopefully we can keep obeying that trend line, and we'll keep going. Now we have a brief, tiny little, no, I wouldn't even consider that divergence. Price action was good there. Yeah, on the, I mean, this looks pretty powerful on as soon as it broke this, which is funny how it happened. So this is W, and breaking this peak here would be very bullish, and it just happens to line up with a horizontal, which is what I like to, when I talk about confluence, that's the kind of thing that I like to see. I like to see things line up like that. So this little peak there, usually I would have liked to see it, and I think I'm going to jump straight into the daily now, because I want to see, I'm going to pin that little section there so that way we can get a better view on the daily. of where that was, because sometimes you get lost there. And yeah, that was extremely bullish, just breaking above that. So now I want to see what happens here in this section between this little block between, where's my little drawing tool? So we have a little bit of a block here that I'm interested. So I think that'll be a little bit of a range, and you can see that on the weekly, huh? Jeez, it's been very little price movement. So let's dive into the daily. Wow. Wow, you don't see that very often. At least I don't. So, hey, where'd it go? Oh, I probably gotta play with the visibility. Let me see the daily there. Okay, so dive back in. And we have, yeah, that was a nice gap there, huh? Sheesh. So another gap here. That's a horizontal level here on the daily. So we've broken above that. So I would keep an eye on what happens between price in this general area. Is it going to respect this horizontal? And is it going to use it as support and then bounce above it? Or if it's going to break down below that and go and retest this horizontal down here. Now that's a big price range between 134 and 110. It's interesting. There must be some. This happened when? This was November 2019. November, October. Yeah, so a lot of, that's interesting. November 2019. Sorry for the dead air here. I'm just trying to see what's going on. I wonder if it's earnings, surprise earnings. So I had a little bit of a, interesting. Well, anyways, technically is what I like to focus on for the most part. So how could we have seen this potential movement? Let's say we're somewhere around here. So we would have been able to get or see or possibly predict, and no guarantees because you never know, but an ABCD based off of that swing low to the swing high and then cloning it to this little, doesn't have to be perfect, but just get a good idea. So we would have tested this horizontal here. Well, I wouldn't consider that a horizontal. I would have had a price target of 115 going back to September. Broke above that, and it's been pinned quite literally to that region there. Now, here's where it gets a little tricky. So we have some RSI divergence. You can see that there's a slight slope on the upside of price when it comes to on the daily chart. Now, am I on it? Yeah, so you can see that price is pretty much doing, I have a magnet, so let me take that off. So price is slowly climbing up, right? So a very slight, I mean, it's a 1 degree, just to give you an idea how steep that is, which is not much. And then we have a more severe drop. So slightly higher highs in price, but yet we have a little more dramatic lower highs in the RSI. So that's a little bit of a cause for concern for me. Some of the analyst downgrades kind of, well, theirs were way before. Where were they? Is this starting November? So give or take. Yeah, I would be a little bit, I would not be buying here. This might truly form a double top that we were seeing on the monthly. I think on the monthly we were seeing that little section there. So this might be a true double top in the making. Let's go back to the daily. Mostly because of that, it's just a long time to be in that. Just to give you guys an idea of what kind of price action this is. This is going between a low of 132 and 61 cents and I think today was a higher, yeah. So 132 and 134.42. Yeah, so a $2 difference in stock price between November 25th and today, February 14th, Valentine's Day. So kind of gives you a little bit of an idea there. So higher highs there, even though a minuscule amount, but at the same time we have lower highs in the RSI. So that to me is a warning. We also have the lower highs here, ultimately peaking here, I think maybe might have been yesterday. So that just gives me a little bit of a warning. So that I can see a pullback there. Now, this is really funky price action. So it's kind of hard for me to give a proper estimate of what may happen. And again, this is what may happen. Definitely not what's going to happen, because nobody knows what the heck is going to happen. So let me take these off. You know, I'm kind of curious. Let me draw this first. I'm going to draw this ABCD and then clone it to this low and see if that 108 range, give or take. Okay. Sorry about that. Just want to play with it. So we go to that low here. Oh, I don't have a magnet. That's why. So magnet there. Magnet. It's so tight. And we can see a test of the 38.2 would make the most sense to me, because that's just above that horizontal. If we do roll over, I mean, that's a pretty big drop. But yeah, I don't know. I really don't know. I don't know what's going to happen with this. My spidey senses that it's going to roll over. I don't know if it's going to be as steep as this, but it could be. It could be. I don't have any strong reasoning for anything else. But again, even if it does roll over there, or even if it goes all the way down to 61.8 or 78.6, when we go back to that monthly, that is a crazy uptrend. So I would not be very bearish unless we come all the way down and test this and then break below that and then test this trend line here. If that's the case, then yeah, I would switch to bearish. But there's no indication at the moment that that's going to happen. So if we draw another trend line here, I guess you can use this as more of a guide. So if we zoom in, we can see that basically, yeah. If we take this swing low here to this swing high of today, that 30.2 lines up very nicely with that horizontal. So I can see a pullback all the way down to 110, looking at the monthly. And it would not be bearish because we're still following this trend line. So even a test down to 61.8, still bullish and still a healthy retracement. So bearish, once again, you know, this stuff is not rocket science. So I can see a healthy pullback between 110 and 96, especially with that recent daily, double toppy up here on the monthly, and also on the daily we have some divergence happening there. So who knows how that ultimately resolves. And let's say that you're bullish. Let's say you're bullish. I would look at this and then do some extensions. So a higher price of where it would ultimate peak out at 141, which looks like it's actually the high of, yeah, look at that. So the high, the all-time high, got a little stuck there, sorry. The all-time high was at 141.64. The 1.13 extension, which would be the first stop, and usually for a fake out, that's kind of where it happens. It jumps all the way up there and then pulls back down and retests a lower fib. That almost lines up to the T. That would be a 141.68, a 4 cents difference. Um, so I can see that. I can see a brief rise to the 1.13 and then rolling over a little bit. Um, and then, and if you're really bullish on this stock, then I think it would break above that, go to the 1.272 or the 1.618. So between, we're looking at first stop being 141 if you're bullish, and maybe as high as 168. But from what I'm seeing it being a little bit. I think it might roll over. I think it might peak at 141 before rolling over. But who knows? Who knows what's going to happen? And that is it for Tiffany. So far we are 45 minutes in, which is not terrible, I guess. I'm trying to give you guys some decent info. Hopefully you guys find value in this. So now we're looking at 1-800-FLOWERS. This one I would assume is going ape poop. I would just assume that everybody's just ordering flowers left and right, especially today. So we have some overall, again, bird's eye view. Don't want to dive too deep into this, but seeing some greens. That's such a lame fundamental analysis. Oh, there's some greens, but yeah, I mean, if you want to get just a quick bird's eye view, that's, it's better than not. It's better than just assuming a stock is going to do well or whatever. It's just, at least it gives you a little bit of a peace of mind when you see some of this. So not terribly bearish, pretty much neutral. On the analyst side, can't talk, I apologize. Recently we've had a couple of upgrades, going from neutral to buys, targets of 22, 24, 19. So we're looking at about $22 average there on the price. We had one downgrade recently. Oh, actually, no, that's not even that recent. That was like a year ago, over a year ago. So let's keep that number in mind, 22. Obviously a bunch of news. I mean, if this is not already obvious, we have 1-800-FLOWERS.com. It's a website where you can order flowers. It's not rocket science, So apparently not only flowers, you can buy a bunch of stuff. Fresh cut flowers, floral arrangements, plants, gifts, popcorn, gourmet food, gifts, baskets, cookies, chocolates, candies, wine, gift quality fruits, as well as balloons, candles, keepsake gifts, jewelry, plush stuffed animals, and pretty much everything. Are they part of? Also, yeah, they're part of a bunch of other crap, like Harry and David, 1-800 baskets, Cheryl's cookies. So the popcorn fact. Oh, that makes a lot of sense. So yeah, so they have all these other brands that they've either acquired or created, and they are just running under this one umbrella. But again, one of what I consider the most critical indicators for me on the fundamental side is insider trading. So see a lot of sale, and zero buys, and this is all from the CEO president. So a little bit of a warning. Some director action recently. No, this was back in August. So interesting. So overall, not bullish for sure on the insider trading. But the numbers themselves seem to be pretty, average. So not, I don't know, just I wouldn't be looking at this personally to invest in, but yeah, that's kind of how I skim a stock really quick and just try to take in a bird's eye view of all that. So let's go. I think it's FLWS. And sorry if I keep holding my my microphone to my mouth. It's just that it keeps rubbing with my shirt, and I'm assuming that's got to be annoying to hear. So FLWS, 1-800-FLOWERS.com. Let's go to the monthly. We are there. It was listed just before 2000, so 99, the dot-com boom, and like I've said before, whenever something is IPO'd, expect a major pullback. All these insiders want their money. All these investors, they want their money back, so they're going to sell, recover, and then if they believe, they probably will buy back in. So we can actually kind of test that, see if that's right or wrong. So I would draw some Fibonacci's, and most likely, what the heck did I do here? Okay, yeah. So drew that one wrong. So there we go. So with Fibonacci's, it's basically, yeah, you identify a swing high, swing low, and then you typically see that you're going to be buying back between the 61.8 and 78.6. Not rocket science. It's obviously there's more to trading and technical analysis than that, but if you just wanted to use one tool to kind of give you a pretty good buy, that would be it. The Fibonacci. I mean, I would say that if there's one tool that you can use to at least prevent you buying the highs, this would be it. So if you see this crazy action happening, and then you just wait for that pullback, this is basically it. So, and it works the other way around too. So let's you see this IPO dump. So you expect it to be stopping around the 78.6, which if we zoom in, got pretty close, but it's between that 61.8 and the 78.6 on the swing high to swing low. So that just keeps flip-flopping when it's in a range. That's just basically what it is. No more science to that. And all these level act as very nice support and resistance. Again, Fibonacci, Google it. It's a pattern that's found in nature and everywhere, and found in the charts as well. And you can see that it's crazy how it respects it. So now, whether it's a self-fulfilling prophecy and people expect that that's going to happen or not, I don't know what to tell you. But the point is that it respects it pretty well. So you see in this swing low to swing high, people are buying back it. So smart money is selling up here, buying back in this section here, or if they're smart down here, which this might be the 886. Let's put that on. No, just above it. But you can see how it's buying back, and then if we just keep flip-flopping this, you can see how people will typically sell on the other side of it. Yeah, so this one got pretty, it didn't actually touch a 61.8, but it got pretty close. But that's the idea. You would buy low, sell high, you know. Now it's easy to see it when the charts are like this, but you know, in real time, people stress out and they freak out and whatnot. So, and we're on a monthly, which is much easier to see than on a daily or intraday for sure. So, but anyways, let me not get into a lesson here. Let me look at this uptrend. So let's draw a ray from this swing low, and then, well, you know what? I'm gonna do this, which I believe it's a better. So we have this ray slash trend line that has been respected pretty well for a number of years. So touch, support, 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 did its own thing, was actually using the 20 EMA as more of a guideline there as a support and resistance level versus any other levels, and broke through it, tested between the 50 EMA and bounced between the 50 and the 20 EMA, which happened to coincide with this trend line, and then just kept going above it, and then finally, boom, broke below the trend line briefly and flip-flop between those two levels since, let's see, August 2017 until August. So for a full year, it was pretty much flirting with that. Broke again below it, got close to a 50 EMA test, but pretty much respected the 20 EMA. Once again, broke above this trend line, and it looks like it's seesawing between those two. Once again, it looks like it's finding support on that 20 EMA, and it looks like, if history is any indicator, it looks like we might expect something like what happened here to happen once again down here, which would be actually market structure. This would be a nice W, I guess you could say, which if it did happen, a break of this would be very bullish, which kind of coincides with this trend line. So yeah, but it's kind of interesting to see that we are currently below that trend line. So just a heads up in that one. So now the angle of this one's 21, which is healthy. And if we draw another trend line, we see that this one was tested and respected pretty well. Let's see, pretty decent there. This is 15 degree. I would see that it not break below this. If it breaks below this trend line, then I would be a little bit more on the bearish side, especially considering that there is a horizontal here. So let's draw that sucker. So yeah, so that kind of lines up pretty well. So if it breaks below this horizontal, I would be stressing out a little bit. So a break of the trend line, this blue trend line, and a break of that horizontal would make me bearish, because at that point we would be, instead of drawing a W, which, let me see if I can do this really quick. So instead of doing a W, we would be doing an M. And that M would coincide, the break of it would coincide with this horizontal, which would be bearish as F. So I mean, it wouldn't spell doom, but you know, it would just, I would not be in stock at all if it just, as soon as it broke that, especially if it broke below this level of $10. I don't know if I would wait that long, to be honest with you. I think I would be out at just a little bit below this horizontal break. So yeah, I would keep a very close eye on this particular zone, the bounce between up here. So ultimately bullish, I want to see it, you know, creating some structure and then breaking above $21 and staying above that trend line. Still bullish, just not as, I guess this would be my analyst outperform above this yellow trend line, and this would be my perform trend line, if you want to go that route, where it would be basically bouncing between these two and kind of like respecting the 50 and the 20 EMA. Now, if it breaks the blue trend line and the horizontal, then I am out of this. And by the way, I'm not in any of these stocks, so there's no personal bias. And even if I was in this, I mean, I'm the first one to identify what I see is going on, and I'm not going to kid myself. Why am I going to kid myself and lose money? Doesn't make any sense, right? Let me fix this mist that suddenly appears behind me. Sorry about that noise. And so yeah, so now let's see if we can get some more confluence there. So, and we are on the monthly, so I haven't even dive. You know what? Let's dive into the weekly and not make this even longer than what it is, because we're already touching the 1 hour mark. But not terrible for 3 stocks, I think. But I guess your feedback will say, if your feedback is positive, then I know it was not bad. And if you find this to be boring, I'm sure you're going to let me know and whatnot. So we'll see. So on the weekly, it's basically the same thing. Not much is changing from what I see. There was some positive market structure here. Once again, as soon as it broke above this right here, this little market structure W, that's when it was, I mean, that was just a crazy move on the upside. So now here's where I'm trying to see what's going to happen. Is this going to turn into an M and just break this horizontal here? If that happens, then like I said previously, I mean, I would be running. I don't know if I would wait that long, to be honest with you. So let's go. There's not really much here. We are on the positive side. Obviously, the price action has been going up. So I guess one way to keep an eye on this is an additional way to keep an eye on this is on the weekly. Keep an eye on this trend line. See if it just keeps respecting and keeps going higher. So that would be one way to see it. But let me dive into the daily on this sucker. And so this looks a little bit almost like heads and shoulders-y. Sort of head and shoulders-y. So, and I'm not the best at identifying this, so I'll be the first to admit, but we can do something like give or take. This is not going to be excellent, but so something like this, where normally you have a target between so doubling. So the height of this is basically the projected outcome, which would be around $17. Now again, I'm not the best at identifying head and shoulders. This looks heads and shoulders-y, but again, not the best at it. You could even argue that this could be it, maybe, and maybe there were multiple head and shoulders within it. And if that's the case, we're looking at somewhere here around 118. Some people don't do it to this neckline. They consider this more of a neckline because of that angle here. So if that's the case, then you're still looking at 18 or so. Let's get rid of that. And once again, we can draw trend lines. It's probably one of my favorite tools to use because it just gives you a very clear identification. So, so a trend line is identified by at least 2 points, confirmed with at least 3 points. But the reality is it doesn't have to be picture perfect. As long as you have some pretty good, like this is a nice little tail down, wick down, whatever you want to call it, tail hit there. So just use it as a guideline. That's the way I see it. So if it goes a little bit above or below, not crazy for me. Now, if you see it like just break down, like something like this, like if you have a crazy bar candle that just breaks completely, just destroys your trend, then you want to wait for at least whatever the time frame you're studying, which is a daily. In my case here, wait for that to confirm, and then if you see continuation, then yeah, then not good. But here we're looking at some healthy uptrend. The RSI is going from a bearish to neutral and on its way to a bullish zone. So that's positive. And same thing here. So I don't have, so again, I think the macro gave us a better picture here, where I guess we can go to the monthly to see less noise, where basically we're in bullish. I think we're in bullish continuation, and we may continue seeing this. But at the end of the day, that's what I want to see happen. If I'm bullish on this, I want to see this break above this trend line and preferably above this horizontal here. So that would, to me, mean it's going to be, very, very bullish. If it bounces between these two trend lines, the yellow longer term and this bluer one, and especially within these two EMAs, then yeah, it's still bullish. But once we break below this, and especially below this horizontal, then to me that's just not very good. So let me see if we can draw some extensions just to get some price targets on the upside if we are hella bullish, and that would be first stop of 23, almost $24 and 26. So yeah, I would see that as the next obvious. So so if we're able to break through the 23, look for between 26 and $31 range. And on the downside, if we believe that that we're going to roll over, then we're looking at these trend lines. I don't even have to draw the fib. Actually, you know what? Let me draw the fibs just so there's additional confluence, and I'm not talking out of my, you know, where. So 61.8 also lines up perfectly with that horizontal. So in the perfect world, we would want to see this roll over no lower than the 61.8. If it does roll over below that, then, and again, we're on a monthly, so this could take, obviously it's going to take several months, you know, unless we have some insane news or fundamental event which will nullify all this technical analysis. But if it does break to the downside, the really what you want to see if you're still bullish is no lower than 61.8 on the monthly, and that's because of this trend line, this horizontal, and the fib levels all lining up very well. Now if it does break below that, really your last line of defense here is at 78.6, which happens to coincide with that 200 EMA. So if that 200 EMA is I wouldn't wait that far if it were me. If it were my trade, I would not wait that long. I would honestly keep it up here. Anything below this, I think, even though this is typically a buyback zone, I don't know, I'd be a little bit on the hesitant side. But if you're a long-term investor, that's kind of what you want to see, right? You want to see a pull back. The 200 EMA would act as support, and then this would be your buyback zone, and you'd hold off for months and months. If you're more of a swing trader, day trader, I would not want to be holding below the 61.8. So hopefully that gave you some good information. This is going on my longest video yet with 1 hour and 7 minutes. So thanks for staying with me. Hopefully you saw a good chunk of this. Give you 3 stocks, Valentines related. So we reviewed, I was going to say Hennessy, not Hennessy, Hershey. We reviewed Tiffany, and reviewed 1-800-Flowers. So thanks for tuning in. If you have any questions, let me know. I really appreciate a like and a subscribe. And yeah, let me know if you have any requests, any feedback. Am I missing something? Is there something that I can clarify? Let me know what I can do to improve and make this a little more of value to you. The more I do this, the more I'm getting comfortable, although I know I'm not smooth with this yet. In case you haven't noticed, this is not it's not something I'm a natural with, but just trying, you know. It's always fun to break out of your comfort zone. So yeah, have a great weekend. Have a lovely Valentine's Day. And I don't know if I'll post on the weekend. I try to do Monday through Friday, but maybe I'll do something on the weekend. I don't know. We'll see. But if anything, I'll see you Monday. Thank you so much. Have a great one.